Hey, what's up, everybody? Joe Steele here, crypto in the house. It is Wednesday. It's August 31st. Today, I'm going to talk about what Bitcoin is up to. It's holding 20K. Can it hold it? How long? Do we know? Does anyone know? We'll see what happens there. Secondly, I want to talk about, do crypto bailouts work? I mean, we see a lot of money flowing into troubled companies, trying to make sure that they keep the reputation, everything going for crypto. Do they work? And finally, housing. Is housing going to get worse next year than it already is? We will see. We will dive into that. So starting with the first story for today, Bitcoin. It's holding 20K, but analysts say that Bitcoin open interest leaves room for more deleveraging. So we'll see what happens. Repeatedly dipped under the 20K level. Some experts are projecting a deeper downside in the short term. Earlier in the week, the crypto fear and greed index dropped back to extreme fear, reflecting the softening sentiment among investors. Last I checked, I think it was at 23% as of this morning. So still in that extreme fear level. We will see if it can hold that support, but many people are not very optimistic about that. Looking at Delphi Digital, they put this chart, which is very cool, says higher value suggests that open interest is large relative to market size. That implies higher risk of market squeezes, liquidation cascades, or delivering events. So I think it means deleveraging events, but delivering events is delivering, but we'll go with deleveraging. So looking at this chart, we'll see the Bitcoin open interest, and you can look at the numbers here going all the way back to November 2020. And basically BTC is in the yellow and the futures of leverage ratio is in the blue. So for what that's worth, we will see if that can hold that 20K level. Going into the crypto bailouts, they had asked Sam Bankman-Fried, who obviously spent a ton of money trying to help these embattled companies. Some he helped, some he was rumored to be wanting to help. Some will find out in the future if he will continue helping them out. Basically, he's saying, like, look, it's been a mixed bag of results, essentially. Some have been really good. Some have been probably not worth it. He spent about $1 billion, been behind about $1 billion worth of deals during this crypto winter. The higher goal was to try to backstop places rather than maximizing all these deals. So again, he's just trying to make sure the bleeding stops, and that crypto doesn't get a worse reputation with a lot of the TradFi people, and just the general public. We want to make sure that this industry continues to stay in positive light for people. And I think the news happening lately has done the reverse. So he was out there trying to say, like, hey, let me try to help you guys out. Let me try to make sure it's not just for the company, it's for the good of the industry. So he's, basically stepped up and said this year to throw financial lifelines to struggling cryptocurrency firms. And it's been mixed, he told Bloomberg. Moving into Paraguay, they were rumored to have, they had a bill in front of them by their Senate last month, basically saying, like, hey, if we could have, a crypto regulation law in place, but he vetoed it. So the bill was approved by the Senate as low energy costs continue to boost mining activities in the country. So he vetoed the bill, which was basically trying to recognize crypto mining as an industrial activity. His reasoning for the veto is that the high electricity consumption could hinder the expansion of a sustainable national industry. Basically, he said that the mining uses such an intense capital with low manpower usage, therefore would not generate add value on par with other industrial activities. So, and then, they throw in this graph here, Cointelegraph, about how a LinkedIn post that, crypto shows that crypto and blockchain jobs listings rose 615% last year compared to the year before. Moving on to one more story in crypto, Meta, whether you're a Facebook, Instagram user, they have posted this tweet saying that they're going to let you post digital collectibles across the two platforms. You can now connect your digital wallet to either the app or share your NFTs on both. Obviously, there was a lot of laughter, I think, from people because of the data breaches we've had from Facebook over the years. Obviously, there's just as many people that are very excited. So obviously, Meta is trying their hardest to kind of integrate themselves into this space, and hopefully this is a good thing for people. But we shall see once people get out there and start sharing. Moving into real estate, where I was talking about this housing downturn, Fortune magazine took this Goldman Sachs report, basically saying the reports, it was called the housing downturn further to fall. The investment bank forecasts that U.S. housing market will end down into the end of this year. New home sales, basically a predicted 22% drop, existing homes 17%, housing GDP 8.9, and they perspective, Russia's economy is only expected to see a 3% GDP fall for this year, to kind of put it into perspective for you. And they said don't expect relief next year. They expect further declines, another 8% last year for home sales, another 8% in existing, 14%, sorry, in existing home sales, and then another 9.2% drop in housing GDP. Here's a little chart that they put up showing year-over-year change in private residential fixed investment GDP, which is the U.S. housing activity. So their forecast all the way to the right shows 22 and 23, but it shows you backdated to 1993 to give you a good perspective. Obviously, you can look at 2008 and the big crash, and then the peaks and valleys from there. And they said the housing downturn is, of course, a result of the Fed's inflation flight. Not long after the central bank applied that, basically hawkish pressure on this spring on the mortgage rates, housing market slipped into slowdown mode. Shoppers across the country put their home search on pause. More pending listings on the market. More people taking their listings off the market, right? So they're trying to help rein in this inflation, but the Bill McBride, the author of this economics blog, Calculated Risk, told Fortune housing is not the target, but housing is essentially the target if you want to put it in perspective. And here's the chart to show you, basically, 1970 all the way to this past year, U.S. home building, single family housing starts. So basically, the gray line denotes a recession. So you can kind of get an idea of where things were when the recessions were hitting and how home building looked from there. Finally, this is kind of a weird thing that just popped up from Redfin. More people are moving in places experiencing intense droughts than moving out of them. So almost 3/4 of U.S. metros, right, with more than half of homes facing intense drought, saw more people moving in than out this year. So about $17 trillion worth of homes, about 25 million properties, experienced intense drought in August, up 42%. There were 13 metros, Vegas, Sacramento, Austin, where 100% of homes experienced intense drought in August. All but 2 have recently seen more people look to move in than out. So pretty interesting story there. That is my last story for the day. I do crypto and real estate news. I share the most pertinent stories with you that I feel make sense for these two industries. So if you like this kind of content, you find value here, please like this video, consider subscribing to my channel. I do live stream every day. So I will hopefully see you all tomorrow. Drop me a comment. Let me know what you're thinking of this show. And I hope you all have a great rest of your night, and I'll see you tomorrow.